Are the meeting platform hosts ready to begin?
Yes.
Mr.
Well, good morning, everybody. I call this hearing to order. I request unanimous consent that the chair is authorized to declare a recess at any time. Hearing no objections, so ordered. Today, our subcommittee is meeting in a hybrid format. It's nice to see all of you this morning, both in person and remotely. And this is the first time we're doing the in-person part in several months. I want to be clear about what makes this format possible. First, the wide availability of vaccines and boosters throughout the United States, and specifically to the members of the staff, members and staff of this committee. Second, the regular and continued adherence to the recommended health and safety protocols. This pandemic, I think we all know, is by no means over, but we've reached a point where we can safely engage in person if we follow certain practices. This information previously was provided to members and staff, but I want to reiterate what the committee will require in order for members and staff to participate in this hearing in person. One, if you're unvaccinated or your vaccination status is undetermined, you must wear a mask at all times and maintain physical distance within the hearing room. Two, if you're feeling unwell, you should participate in the hearing remotely. And three, members are permitted to be accompanied by one staff member while they're present in the hearing room. During the covered period declared by the Speaker pursuant to House Resolution 8, remote participation in hearings will continue to be an option for members. We'll continue to assess whether meeting in person is advisable and feasible. For those members participating remotely, if you're experiencing connectivity issues, please make sure you or your staff contact our designated technical support so those issues can be resolved immediately. Members participating remotely must continue to remain visible on camera for the duration of their participation in the hearing unless they experience connectivity issues or other technical problems that render the member unable to fully participate on camera. It is committee policy that members participating remotely will remain muted when not recognized, and for those in the hearing room, the policy remains the same, that only members who are recognized or seeking recognition should unmute their microphone. This is out of courtesy to all members on the committee and so that background noise does not interfere with another member who is recognized to speak. When you're recognized, whether in the hearing room or on the remote platform, you'll need to unmute your microphone and pause for 2 to 3 seconds before speaking so that your words are captured on the live stream. Without objection, members will be recognized in order of committee seniority for questioning witnesses today. This will make it easier for me to ensure all members participating have an opportunity to be recognized. Whew. Now that we have that out of the way, thank you for bearing with me. I want to welcome everyone to today's Economic Opportunity Subcommittee hearing, where we're discussing barriers to homeownership for our veterans. The VA Home Loan Program is one of the most popular benefits that a veteran earns for their service. The benefit was established by the Servicemen's Readjustment Act of 1944 to help veterans returning from World War II purchase homes. While serving in the armed forces, many veterans missed out on the opportunity to establish credit through property ownership in the same manner as non-veterans. The VA Home Loan Guarantee assists veterans by ensuring mortgages made by private lenders. In many instances, this allows the veteran to purchase a home without making a down payment. These mortgages can also be used for refinancing, construction, and for certain improvements. Since the program's inception, VA has guaranteed an estimated 25 million loans for veterans, including almost 1.5 million in fiscal year 2021. However, many veterans still face obstacles when utilizing VA home loans. So today we'll examine the persistent issues veterans face in the home buying market, including predatory lending, program stigma, and discrimination. Across the country, we've seen an incredibly tight housing market with home prices soaring and inventory shrinking. In September 2021, more than 20% of buyers were paying in all cash. Many veterans attempting to purchase a home using a VA loan are finding they simply cannot compete. Sellers often decline offers from veteran buyers, sometimes even choosing lower offers instead due to unfair stigma around the VA loan program. Meanwhile, veterans have also been targets for predatory lending practices, like loan churning, that weaken their financial standing. Fortunately, over the years, Congress has made many improvements to the program. In 2018, Congress passed the Economic Growth, Regulatory Relief, and Consumer Protection Act to prevent lenders from taking advantage of veterans by enticing them to undergo multiple refinances in a short period of time. Earlier this year, my legislation, the Johnny Isaacson and Phil Rowe Veterans Health Care and Benefits Improvement Act, expanded entitlement to members of the National Guard who serve on active duty for more than 90 days. And during the COVID-19 pandemic, VA instituted several efforts to protect veteran borrowers, including foreclosure and eviction relief, loan modifications, repayment plans, refund modifications, and special forbearance. Through these efforts, VA helped over 120,000 veterans avoid foreclosure in 2020. So today, we will hear and evaluate these and other reforms that have made it easier for veterans to use their VA home loan benefit. Finally, as our subcommittee remains focused on the continual improvement of the VA Home Loan Guarantee Program, we'll discuss potential changes to the VA Home Loan Program to further strengthen and modernize this benefit for our veterans. We're currently considering several legislative proposals to expand how veterans can use this earned benefit. My legislation, H.R. 4657, the Veteran Home Energy Savings Act, would allow lenders to account for a home's existing energy efficiencies during the mortgage underwriting process. This would strengthen the purchasing power of a veteran seeking a home that has already been outfitted with improvements to reduce its environmental footprint. This subcommittee is also committed to addressing the historical inequitable treatment of black veterans and their families in the VA Home Loan Guarantee Program. Representatives Clyburn and Moulton's bill, H.R. 5905, the Sergeant Isaac Woodward, Jr., and Sergeant Joseph Maddox GI Bill Restoration Act would provide eligibility for surviving spouses and direct descendants of black World War II veterans. Well-documented, racially exclusive housing practices prevented these heroes from achieving the full economic mobility potential provided by the VA Home Loan Guarantee Program and affected the accumulation of wealth by black families over generations. We're also considering my legislation from my subcommittee colleague, Representative Brown. The VA Home Loan Grace Act would provide flexibility by expanding the home loan entitlement to ensure veterans and service members can meet their housing needs while making the best decisions to secure their family's financial future. I look forward to more closely examining these issues and these proposals today. We have a lot to cover, so I'll include my comments there and recognize my friend, Ranking Member Moore, for any opening remarks he may wish to make.
Thank you, Mr. Chairman. Before I begin, I want to thank Chairman Levin and his staff for holding this hearing in person. I'm pleased that we can continue our bipartisan oversight in a safe and effective manner while not staring at a computer screen. I'm glad we're here today to discuss barriers on home ownership among veterans. As Mr. Bell, the Department of Veterans Affairs, will discuss in his testimony, VA has guaranteed over 23 million loans in excess of $2 trillion since the 1940s. Last year, yet another record year, with the VA loan volume climbing to over 1.2 million loans. That's a 100% increase from 2019. These impressive numbers represent millions of veteran service members and their families who may not have otherwise achieved the American dream of owning a home. I believe that this generous benefit succeeds for three major reasons. First is the workforce. The staff of the VA Home Loan Program continue to do more with less on a loan volume as it increases. Executive staff are always happy and willing to engage with Congress and the public about the best way to improve the program. Second is a reliance on IT systems at work. The Home Loan Program invested in IT systems years ago and have seen these investments pay off in spades. I know there are plenty of lessons that other VA benefit programs could learn from the deployment of these IT systems. I also look forward to hearing today about plans to upgrade these systems in the future. Third, I think most important is the program is reliant on the work of the private sector, whether it's loan providers, realtors, appraisers, and others, to help drive the success of this program. This partnership is something we should try to emulate in the delivery of other veterans of benefits, or other VA benefits. While I believe this program runs very well, there is always room for improvement. With today's competitive housing market, I can understand where some of the extra steps that the VA requires to guarantee loans can make the benefit less competitive compared to other loan products. I look forward to hearing from VA and other witnesses about what changes can be made to ensure the VA loan product remains a viable option for veterans, while at the same time protecting the interest of taxpayers who are on the hook if the veterans default on those loans. I'm also interested in learning more about VA's use of their request for a reconsideration program that can help veterans who believe their home was improperly appraised. I hope the VA can tell us about how veterans learn about this program once they receive their certificate of eligibility. We're also lucky to have Veterans United with us today. They're one of the best lenders in the VA Home Loan Program, and I hope they can give us the private sector's view on how to improve the program. Finally, I'm interested in learning more about how the Biden administration is taking action against unscrupulous lenders who are trying to take advantage of veterans through this great benefit. Too often, we hear about veterans being inundated with junk mail making claims about benefits that are simply too good to be true. Thank you all for being here today, and I look forward to your comments and recommendations. And with that, Mr. Chairman, I yield back.
I think the ranking member, I certainly share your belief. We've all had enough time looking at computer screens, and that's the case for, well, I have a 9- and 7-year-old at home, and I'm always on their case about screen time, so I think that applies to all of us, too. It's great to be with you all in person today. For our first panel today, we'll hear from the Veterans Benefits Administration. We're joined today by John Bell, Acting Executive Director of the Loan Guarantee Services for the Veterans Benefits Administration. Welcome, Mr. Bell. It's nice to see you. Thank you for being here, and I'd like to now recognize you for 5 minutes.
Good morning, Chairman Levin, Ranking Member Moore, and other members of the subcommittee. Thank you for the opportunity to appear before you today to discuss the Department of Veterans Affairs VA Home Loan Program. It was 80 years ago yesterday the U.S. Navy was attacked at Pearl Harbor, bringing the United States into the Second World War. On behalf of a grateful nation, Congress passed the original GI Bill in June 1944. And from that historic legislative achievement, the VA Home Loan was born. As you know, the mission of VA's Home Loan Program is to maximize opportunities for veterans to obtain, retain, and adapt their homes by providing a viable and fiscally responsible benefits program in recognition of the service to their country. Our vision is simple. VA should be the home loan product of choice for veterans and also the best place to work for our employees. Since 1944, VA has guaranteed over 27 million loans worth nearly $3.3 trillion. Over the past 2 fiscal years, we've achieved record loan volume, and in FY21, an all-time record of 1.44 million loans for more than $447 billion. Of those loans, 444,000 of them were purchase loans, also an all-time record. Veterans choose VA because when they do, they receive competitive interest rates, pay limited closing costs, and avoid private mortgage insurance requirements, usually without having to make a down payment. While VA's unique underwriting requirements, which include residual income and alternative credit information, encourage lenders to consider veterans with less than traditional credit profiles, VA has observed a steady rise in veterans' key financial indicators over time. Today's average veteran boasts a credit score of in the 700s, a monthly gross income of $8,000, and liquid assets over $40,000. Yet misperceptions still persist among sellers and selling agents that VA financing is less than desirable than conventional. While VA continues working to dispel myths surrounding the VA Home Loan Program, we believe more industry education is needed to break the stigma that veterans are anything less than highly competitive borrowers utilizing a financially secure loan program. VA is encouraged by the fact that the record numbers of veterans are using their home loan benefit amid intense competition in today's housing market. Factors such as reduced housing stock, rising home prices, coupled with cash-only or sight-unseen purchase offers have led to conditions where all buyers with financing face difficulty having their offers entertained. While VA is confident that its policies will continue to support veterans, we stand alongside them and share their frustration by the lack of transparency in the sales offer process, the loan application process, and how veteran borrowers may be perceived or dismissed. VA also has recently heard misperceptions about the VA appraisals affecting the home buying process. Like other government-sponsored home loan programs, VA's statutory authority outlines requirements for appraisals to help establish the value of the property, while appraisers also evaluate whether or not the home meets minimum property requirements, or MPRs. Another common misperception is the VA appraisal is a home inspection and that any issue identified in an appraisal derails the home buying process. In fact, 85% of VA purchase appraisals since FY19 have met or exceeded the sales contract price, and only 17% noted an MPR requiring repairs. And while certain areas of the country are seeing longer appraisal times for all loan products, national level data shows an average time for an appraisal assignment to valuation is 14.8 business days, which is comparable to other loan products. I would also like to note that VA remains committed to identifying and addressing predatory lending practices with the mortgage industry. VA's implementation of Public Law 115-174, including disclosure requirements and continued collaboration with CFPB and Ginnie Mae, has protected veterans, lenders, and investors against costly, non-beneficial refinance loans. While VA routinely monitors mortgage companies and addresses behavior through its existing oversight program, we encourage legislation to exercise broad statutory authority to address detrimental lending and servicing practices as they occur. Mr. Chairman, we will continue to provide the country's veterans with a safe and viable loan guarantee option, but more education is needed to dispel longstanding myths about the program and veteran borrowers. Thank you for the continued support of our program and this opportunity to speak to you today. This concludes my testimony, and I welcome any questions that you or other members of the subcommittee may have.
Well, thank you very much, Mr. Bell. With that, I'll recognize myself for 5 minutes, begin the question portion of the hearing, and I want to dig in a little bit into the appraisal process that you mentioned. In fact, all four of the witnesses in their testimony, the non-governmental witnesses, talk about the significant barriers that the appraisal process can create for veteran buyers. And if I heard you correctly, you said, I think the average wait for a VA appraisal is 14.8 days. Did I hear you?
14.8 business days, yes, sir.
14.8 business days, okay. And you said that that's roughly comparable to non-VA loans?
For the data that we have access to, it is comparable with other loan products.
Are you doing anything to improve the timeliness of the appraisals?
Yes, sir. We consistently are looking at ways to encourage appraisers to join our panel. We look at where we have the need versus where we have appraisers that want to do VA appraisals. We also just recently increased the allowable fees that appraisers could charge in those areas to make them highly competitive with other loan products, including conventional, so that there weren't a reason. We took that reason away so that they could feel like that they could offer the VA purchase appraisal on an even keel.
At any given time, roughly how many appraisers are approved for the VA home loan program?
Right now, we have over 6,000 appraisers nationally.
So at any given time, about 6,000 appraisers. And how do the minimum property requirements, which you brought up briefly, how do those compare to those in a conventional market? VA has basically a requirement to ensure that the property is safe, sound, and sanitary. An appraiser who walks into a home, they have the responsibility to ensure when they see a hole in the wall, when they see exposed wiring, when they see missing railing, we are trying to reduce the need for the veteran, once they get into the property, to have to make those type of repairs. But it's when we're looking at those minimum property requirements, most of the time they are to bring them within building code in that local area. So it's not where VA has these requirements over and above what the building code would allow. It's just we're trying to make sure that if they walk in and they see something, that they're addressing it. I wanted to dig into the stigma around the home loan program and how we can work to address it, and maybe kind of discuss what the root causes are, you think, for that. Because even a perception that the VA loan program is more complicated or more time-consuming can contribute to the negative stigma surrounding the VA loan guarantee program. We've also seen a lack of awareness of certain aspects of the program, like the option for energy-efficient mortgages. So how much of the stigma around the VA home loan program in the market do you think can be attributed to misinformation, and specifically misinformation related to the appraisal process?
Well, sir, you can look at just the testimony that was submitted, from those that are testifying today. There's a difference in an appraisal versus an inspection, and the appraisal is simply for value. It is not intended to be a home inspection, nor was it ever intended for that. So remember, an appraisal is a point in time. So appraiser walks in, they see a hole in the wall, or they see exposed wiring. They're not looking at the life of the hot water heater 2 years from now or 3 years from now, or whether or not the appliances are going to meet a certain requirement, 5 years from now. They're only looking at what they're seeing, at that point in time, and to ensure that it's addressed. The encouraging thing about MPRs, minimum property requirements, is again, 17% of the appraisals have a minimum property requirement attached, but also 63% those requirements are resolved because we have a process where we can waive some of those requirements because the veteran says they're in unique situations, or they have money in the bank that they knew they were going to pay for those. And maybe it's a funding condition where they can take care of that issue before they fund the loan.
I have one last question for you. It seems to me there is a problem with misinformation out there, and I'm curious what else you could be doing, what else VA could be doing to educate, to counteract some of this misinformation among each of the stakeholders, among veterans themselves, among sellers, realtors, and lenders. It seems like there's a real gap and a need for VA to do more around misinformation. What can you pledge to do?
Yes, sir. It's about access. So we can put on webinars. We can put those on our website. We did over 101 outreach events since December of 2019. December 2020, and that's with during COVID. It is about where the borrower is going to get their information. And if we don't look at this collectively as an industry and provide as many opportunities for a veteran borrower to access that type of information, then we're not doing everything we can do. And so where VA, I'm sorry, sir.
Well, I'm out of time, but my hope is that you'll stick around and that you'll listen to the second panel and that you'll interact with them beyond just today in trying to highlight the reality of the program and try to counteract some of the misinformation that's out there, because you've got several of the people in the room right now that are going to be testifying in just a minute, and so I hope you all will stick around. And since we're in person, we can do it. Fantastic. With that, I will recognize the ranking member for his questions.
Thank you, sir.
Thank you, Mr. Chairman. Mr. Bell, appreciate you being here. I actually have Fort Rucker in my district, and the housing market's phenomenal down there. And we're in construction. That's what we do, general contractors. And so to see the demand and try to match that demand and get the loans processed, I know it's a challenging time for you folks. And like I said, there's a lot of cash deals out there now. So it's just an interesting process, but I want to get to my questions. But thank you for what you do. I understand it's a challenging issue. It's a tough market to be in right now, trying to figure out how to go forward. But thank you for your hard work. First, let me say, the question is in the Blue Water Navy law, Congress authorized the VA to use desktop appraisals that can shorten the time needed for an appraisal and significantly less expensive for veterans. What is the current use for this option? What's going on with that program?
Yes, sir. So 40% allow appraisers to use the AAPP program is what what that's referred to. So it's the Assisted Appraisal Processing Program. But only 11% of our appraisers right now are utilizing it. So again, it is education. It is the ability for us to show them how they can how this benefits them and how it will improve the process moving forward. We are certainly we certainly want to increase that percentage, and so we are certainly willing to work with any of the panelists and to get that information out there.
Well, thank you. I'm kind of learning about that program. I'm new here, but that sounds like something we could pursue to make us more competitive at any rate anyway. Yes. Also, a question. In your written statement, you discussed the need for Congress to provide the VA with broad statutory authority to address predatory lending. What is the VA's current authority, and how would you like to see it expanded?
Yes, sir. So thank you for your question. So basically, we have the authority to, if we see that a lender is not making, or sorry, a stakeholder is not abiding by our guidelines, we have the ability to reduce the number of participation that they have in the program. So whether or not they're a lender and we are we're putting them on hold for guarantee, or whether or not they're an appraiser and we're limiting the amount of appraisal assignments that they have. There's a limited participation piece of enforcement that we have. We also have the ability to, we have the ability to fine, but we are certainly looking to alternative ways for that. What we've really done and really honed in on, though, is building the technology and the data so that we can measure performance. And that's where we think that the biggest lift has to occur, is from an enforcement standpoint. You have to set the benchmark of what your expectations are, and then you have to measure that performance. So we've done that through our appraisal management system. We're about halfway there of where we need to be in building that out. We also have our technology enhancements that we're continuing to do, and we've really just kind of started over the past year or two and increasing the guarantee portion of that, which that will give us the ability to scorecard, to really measure them against their counterparts, and we think that will help us in improving that environment.
Mr. Bell, let me ask you a question. You know, like, I also have Maxwell Gunner in my district, and so as we add the F-35s, that sort of thing, we often see an influx of soldiers and people who work there with the base, maybe retired, and they have experience in air traffic control, aircraft maintenance, whatever the case may be. Does the VA have a program where y'all can kind of foresee there's going to be a demand in certain markets to kind of go out and look for new appraisers or people that will work with the programs? Have you thought about maybe looking a little ahead to kind of see where the movement's going to be in the future markets?
We are in the process of building out the ability to review that data, and so we're changing at VA the way we proactively approach analytics, and that we think will set us apart, especially for our veterans, because normally from VA we've been reactive. Because of our legacy systems that we've had, the ability for us to get data, we certainly have some limitations when it comes to the loan application process and those kind of things through automated underwriting systems, and having access to that information and data. But we're building out our platform to be able to get data from other areas, put that in our system so that we can be proactive in how we monitor. So we're getting there. We're not there yet, sir.
Thank you. I'm out of time, Mr. Chairman.
I thank the ranking member. I think Mr. Pappas from New Hampshire is on the Zoom. Mr. Pappas, if you're there, you are recognized for 5 minutes for your questions.
Well, thank you very much, Chairman Levin, and thank you to you and the ranking member for holding this session today. This is really a critically important issue. And Mr. Bell, I'm wondering if I can ask you a question about some of the flexibilities and accommodations that VA made during the pandemic to help protect veteran borrowers. This was a time of extraordinary financial hardship and uncertainty. Some of the flexibilities that VA put forward included eviction and foreclosure protection, loan modifications, repayment plans, refund modifications, and special forbearance. I'm wondering if you can describe the effectiveness of these flexibilities during the pandemic, and if you can estimate without them what the impact would have been on our veterans and borrowers.
Yes, sir. Thank you for your question. We believe that it was paramount in helping us work through, especially with COVID forbearance, lingering out there. What we did is we got out first. We got out early. We told the industry that it's okay to originate loans, and it's okay to originate VA loans, and this is how you do it. Then we took the step of, okay, we've got 3.5 million active loans, and we want to make sure that all of our borrowers have a way to navigate financial difficulty as it presented itself. So we worked with we work to have a waterfall of options for our servicers to be able to offer our veteran borrowers. We think that, and that's through our deferment program, through our Veterans Assistance Partial Claim Program, as well as our refund modification. The wonderful thing about VA is at the end of the day, at the end of this waterfall, the authorities that Congress has given us is at the end of the day, if we can't make it work for the veteran, at least we can provide them some soft landing if they can find a way to stay in the home. In other words, they have income, and that is through our refund modification, where VA can actually take on the loan itself and service the loan. So that is going to be a huge help as we continue to go down the path of helping as many borrowers as we can. But to answer your question, we have around 222,000 right now active borrowers out of the 3.5 million that are still in some type of either loss mitigation waterfall, or they are in forbearance. So we've while that number seems large, 222,000 out of 3.5 million, that's about 6%, which comparatively, I think we're doing very well in our ability to help veterans and move along. We feel confident, though, with our refund modification, and our partial claim program, that we're going to be able to help as many veterans as we can.
Well, I think that number speaks to the need for these flexibilities to make sure that veterans continue to have a roof over their head and avoid any sort of costly or financial penalties down the road. I'm wondering if you're evaluating or considering more permanency for some of these flexibilities that have been provided after the pandemic emergency ceases.
We are certainly willing to work with Congress to understand what those flexibilities would mean for us in the future, we look forward to those discussions.
Okay. One further question. You talked in your testimony that VA developed the COVID-19 Veterans Assistance Partial Claim Program to assist veterans with VA guaranteed home loans as they exit their COVID-19 related forbearance. Programs launched in July 2021, is intended to be temporary and is expected to have very positive impact on veteran borrowers and VA home loan servicers by minimizing foreclosures and reducing the stress on the system. Does VA have an estimate for how long this program is going to be in operation?
We're going to take that into effect as soon as the emergency is or the declaration of emergency ends, and then we'll take into effect of where we stand for veterans. As you know, we are all about trying to give as many flexibilities to our servicers for our veterans to make sure that they're well treated and well taken care of. Again, the good part is we still have that refund modification piece that that we have. But I apologize because I didn't answer your first question, and I want to go back. You asked me how many partial claim requests that we had. We had 922 so far for the year. We do expect that to go up, of course, speaking of the 222,000 that we have, but that's where we are right now.
Well, thank you for your comments, Mr. Bell, and I yield back.
Yes, sir. Thank you.
I thank my friend from New Hampshire for his questions, and with that, I believe the first panel can conclude. We thank you, Mr. Bell, for appearing before us today. We'll now begin our second and final panel, consisting of representatives from veterans service organizations and stakeholders in the lending process. I'll give everybody a minute to shuffle around. Terrific. Well, thank you all very much for joining us here on our second and final panel, again consisting of representatives from veteran service organizations and stakeholders in the lending process. First, we have Emily Devito, Associate Director for National Legislative Services for Veterans of Foreign Wars. Nice to see you. Next, we have Joseph Sharp, Director of the National Employment and Education Division for the American Legion. Thanks for joining us. From the National Association of Realtors, we have President Leslie Ruda Smith. Thank you for being with us. And finally, from Veterans United, joining us virtually is General Counsel Brock Cooper. Thank you for joining us, Mr. Cooper. Thank you, everybody, for joining the subcommittee today. It's wonderful to see your faces. With that, we'll begin with Ms. Devito, and you're recognized for 5 minutes.
Chairman Levin, Ranking Member Moore, and members of the subcommittee, on behalf of the men and women of the Veterans of Foreign Wars of the United States and its auxiliary, thank you for the opportunity to provide our remarks on this important topic. The VA Guarantee Loan Service has long provided upward mobility to members of the military community by opening the doors to home ownership. For over 70 years, this program has been one of the most impactful benefits offered through VA, allowing eligible service members, veterans, and survivors to obtain and adapt homes without a down payment. One hallmark of VA guaranteed loans are their high standards, requiring appraisals by VA certified appraisers to determine home valuation and review minimum property requirements, or MPRs. These standards, designed to protect veterans, ensure borrowers purchase structurally sound homes that are not overpriced. However, these requirements, which are separate from standard home inspections, have perpetuated challenges and fueled misconceptions that hurt veteran homebuyers. For sellers, accepting an offer with a VA guaranteed loan may be seen as burdensome, as sellers fear not meeting VA appraisal standards or the hassle of an extended timeline. Although recent data show the average time to close on a home is within a week of conventional loans, some buyers still hold bias based on a history of extended wait times for VA guaranteed loans, and some sellers may still find 6 extra days to be too long. The current market is seeing an influx in cash offers and concessions from buyers, and veterans without savings at their disposal find themselves boxed out. One of the most rightfully lauded elements of VA guaranteed loans is no requirement for a down payment. But despite the reputation as, quote, no money down, there are still many fees buyers need to prepare for, such as earnest money and appraisal fees. For many veterans, especially those who served for years in junior positions living paycheck to paycheck, there are no savings to draw from. Currently, sellers are being enticed by as-is inspections and help with closing costs. Veterans who do not have savings to conduct repairs or provide closing funds up front are once again unable to compete. During the loan application process, transitioning service members and military spouses may also face barriers, particularly when verifying income requirements. Service members transitioning within the year and military spouses with a history of short-term jobs that reflect their frequent moves face scrutiny that leave them unable to even qualify for loans. Although many prejudices against VA guaranteed loans are based on misinformation, the program must still make necessary real changes to be competitive, including minimizing the gap in closing times with conventional loans. The VFW recommends increasing funding to VA to bolster the VA appraiser force through targeted marketing and recruitment of appraisers and incentive pay in addition to the temporarily increased appraiser fees, which would not be at the expense of buyers, to entice more appraisers in more regions to become VA approved. VFW also recommends funding VA to conduct outreach and marketing to the public to combat misinformation on how much longer VA guaranteed loans truly take. Given the major impact of the negative reputation of the appraisal process among sellers, VFW recommends VA evaluate the waiver process for MPRs and report its finding on denial rates, timeliness of VA response, and waiver request types. VA must also conduct outreach to lenders, realtors, and buyers to ensure awareness of the opportunity to submit waivers in the first place. It is important for outreach to not only educate against misconceptions that plague the reputation of VA guaranteed loans, but also make sure all interested parties understand the full extent of the benefit to maximize their purchasing power. For example, Veterans are largely unaware of their ability to finance up to an additional $6,000 on top of their loan through VA's energy efficient mortgage to invest in energy-saving upgrades to their homes. VFW recommends VA evaluate this program and increase maximum dollar amounts available based on current market prices for upgrades such as solar panels and energy-efficient insulation. The VA Guaranteed Home Loan Benefit is an important demonstration of the value our nation holds to the service and sacrifice of the military community. We hope that needed oversight and improvements can be initiated quickly so veterans are able to leverage these benefits to their maximum value for years to come, and this program is able to thrive even in times of competitive housing markets. Chairman Levin, Ranking Member Moore, this concludes my testimony. I look forward to questions you or the subcommittee members may have.
Thank you, Ms. Devito. With that, I'll recognize Mr. Sharp for 5 minutes.
Chairman Levin, Ranking Member Moore, and distinguished members of the committee. On behalf of the National Commander Paul Dillard and the nearly 2 million members of the American Legion, we thank you for inviting the American Legion to testify today. Due to the allotted time available, I will briefly speak on the competitiveness of the VA home loans in the recent housing market. First, we would like to address the VA home loans performance during the peak of the housing market earlier this year. Since the program's inception, the VA has guaranteed more than 26 million home loans for veterans and their families since 1944 with the signing of the Servicemen's Readjustment Act. In 2020 alone, 1 million home loans were guaranteed. That year, we witnessed unprecedented growth in the housing market exacerbated by the pandemic. While inventories of homes dwindled, potential home buyers were forced to compete at a level not seen in 2 decades. Housing prices increased nearly 20% from June 2020 to January 2021. For many home buyers, the market was unattainable. Despite the record-breaking year for VA home loans, the portion of VA home loans relative to other loans decreased by 10.5%. Home buyers with cash offers and those using conventional loans boxed out service members and veterans using the VA home loans. What makes the VA home loan less attractive to sellers? According to a 2021 survey by the National Association of Realtors, 89% of all sellers were likely to accept an offer from a buyer with a conventional loan, and only 30% were likely to accept an offer from a buyer using a VA loan. Also, according to the same survey, 59% of seller realtors stated stricter home inspection requirements reduced the attractiveness of buyers using the VA home loan. And 36 to 38% of sellers were surveyed were concerned about the low appraisal values and the lengthy closing timelines. While the above-mentioned matrix are not significantly dissimilar to those of other government home loans, they are still concerning. Some of the biases reflected in the data are due to concrete issues such as lack of VA-approved appraisers in certain regions of the country and market comparison methodologies to include misconceptions about the VA home loan. Therefore, the American Legion has 3 recommendations for Congress and the Department of Veteran Affairs to consider. First, misconceptions about VA home loan buyers must be aggressively countered through education, training, and oversight. VA, veteran support organizations, and real estate associations all have a role to play in addressing home seller concerns such as low appraisal values and lengthy closing timelines. Second, Congress and VA should consider adding flexibilities into the VA home loan for extremely competitive markets. Lender staff appraisal reviewers should have the flexibility to issue notices of value waivers up to 5% above or below the fee appraiser's value estimate, provided the adjustment is warranted by the real estate market. This will prevent veterans from having to pay the difference upfront when the appraisal is not in keeping with market realities. And finally, VA must increase support for VA-approved appraisers and equip them with accessible information and education. The American Legion is encouraged that VA has increased appraisal fees in markets facing a high demand for appraisal services due to increased demand. However, these changes are not permanent, and the specific high-demand counties VA has identified are not easily accessible. By standardizing the fees and expectations for appraisal fee schedules, VA can build confidence in VA appraisal assignments. In closing, our service members, veterans, and their families should not have to worry about finding a suitable home, whether they're changing duty stations, transitioning from the military, or simply buying a new home. Chairman Levin, Ranking Member Moore, the American Legion deeply appreciates the opportunity to testify before the subcommittee on such an important topic, and I'll be happy to answer any questions you might have. Thank you.
Thank you very much, Mr. Sharp. I'll now recognize Ms. Smith for 5 minutes.
Thank you, Chairman Levin, Ranking Member Moore, and members of the Subcommittee on Economic Opportunity. My name is Leslie Ruta Smith, and I am the 2022 President of the National Association of Realtors and a broker associate with Dave Perry Miller Real Estate in Dallas, Texas. The National Association of Realtors is the largest trade association in our country with more than 1.5 million members. Our members have a tradition of service. 12% of our members are veterans, have a spouse or partner who is a veteran, and that makes it about 180,000 strong. Realtors have long advocated for improving the home buying process for veterans and service members, and we commend the subcommittee's work on these issues. Our veterans and service members face unique challenges when purchasing a home, especially in a hot market. I appreciate the opportunity to highlight these issues and propose solutions to help our nation's heroes. The VA Home Loan Guarantee Program is a vital tool for veterans to secure their American dream. It offers many unique benefits, including zero down payment requirement. One reason for its success is robust underwriting, specifically the residual income test. As a result, VA loan delinquency rates are lower than FHA loans and comparable to conventional loans. With more than 90% of veterans choosing a no down payment option, this program shows that prudent underwriting and servicing is key. Additionally, it could provide a model for expanding homeownership opportunities to communities disadvantaged by current credit markets. The VA Home Loan Program also plays an important role in narrowing the racial homeownership gap. Between white and Black Americans, the gap is 30 percentage points for the general population, but falls to 19 percentage points for veterans, and that is also a similar pattern for Hispanic Americans. 16% of Black Americans received financing through the VA in 2018, compared to 9% of white Americans. Clearly, hurdles faced by VA borrowers will disproportionately impact homebuyers of color. And unfortunately, many elements of the VA loan program meant to protect veterans and service members are instead keeping them on the sidelines in today's market. The program has requirements that conventional and FHA loans often do not, which can make VA borrowers less appealing. Meanwhile, there's a shortage of certified appraisers, and VA appraisers are even harder to find. Here are some solutions that realtors propose. The first is providing greater flexibility to make VA loan borrowers more competitive. One of the VA program's most significant disadvantages has been the limitations on fees. NAR is working to ensure veterans can compete with other buyers while still protecting them from unnecessary fees. We also continue to explore ways to streamline the appraisal process, and we appreciate the change recently made by the VA to raise the cap on appraisal fees. The second solution is opposing any increase in funding fees to offset costs associated with non-housing related expenditures. Proposed increases often apply to refinance loans, that are raising the cost when veterans are trying to responsibly lower their monthly payments. Any fees charged by the VA in a VA transaction should be used explicitly to support the VA Home Loan Guarantee Program. The third solution is ensuring veterans and service members understand the advantages of a VA home loan. We encourage robust marketing either through the VA or mortgage applications. And the fourth solution is improving the renovation and rehabilitation program. We all know supply and labor shortages have pushed up construction costs and are expected to persist for up to a decade. Meanwhile, the VA home renovation loan remains capped at $50,000, which should be reconsidered. Thank you for this opportunity to share NAR's perspective on removing barriers to veterans' home ownership.
Thank you very much, Ms. Smith. I'd now like to recognize Mr. Cooper for 5 minutes.
Good morning, Chairman Levin, Ranking Member Moore, and members of the committee. Thank you for inviting us here today to discuss the barriers facing veterans in the housing market. My name is Brock Cooper, and I'm the General Counsel for Veterans United Home Loans. As the nation's largest VA purchase lender, we've helped hundreds of thousands of veterans use their VA loan benefit to purchase homes. I was privileged to serve as a sergeant in the Missouri Army National Guard prior to joining Veterans United. On behalf of my fellow veterans and as a personal recipient of many of the benefits this committee oversees, I want to thank all of you for your efforts to ensure the VA loan works for all veterans. I also want to thank the staff of the VA Loan Guarantee Program, including Acting Executive Director John Bell, who testified today, who are always looking to improve the program for veterans. VA has worked hard to make the home loan program a product that truly benefits veterans while maintaining the program's track record as an industry-leading, safe and sound financial product. Even through the pandemic, the VA has continued to make adjustments to the program, both intended to keep veterans in homes and also to make the program accessible to veteran home buyers. Despite the VA's efforts, for many veterans, this was a tough year to become a homeowner, especially for first-time veteran homebuyers. In recent months, countless veterans have told us they were discouraged from using the VA loan. This is partially due to myths and misconceptions that continue to persist regarding VA loans. Here are some important facts about the VA loan program. VA loans have some of the lowest interest rates of any product on the market. Closing times for VA loans and conventional loans are mere days apart. VA loans have had a higher average closing success rate than conventional loans for several years. And even with most veterans making no down payment, VA loans have had the lowest foreclosure rate on the market for most of the last 15 years. These are the things that veterans, sellers, agents, and others need to know and continue to be educated on. The VA loan is arguably the most powerful mortgage product on the market today, especially for those transitioning from the military as first-time homebuyers. In addition, veterans' ability to use the VA loan program have been impacted by the unprecedented housing market that began in earnest after the start of the pandemic. To address this, it's important we continue to explore enhancements to the program to better serve veterans and military families. Responsible enhancements to the VA appraisal process could help veterans and military families improve their ability to achieve the American dream. When appraisals come in low, the veteran is required to pay the difference out of pocket. For many, that's just impossible. Our internal data shows significantly more veterans are being denied due to collateral or valuation issues since March of 2020. There are many reasons that contribute to this issue, and we recognize there are no easy solutions. But we believe the challenge is ensuring appraisals truly capture market values. There are existing VA loan processes such as the Tidewater Initiative and the reconsideration of value that allow additional information to be submitted after the appraisal in an effort to reach more accurate values. I would refer you to our written testimony for details, but in short, we believe that there are options to add flexibility to these processes to make veterans more competitive. Some of these flexibilities include extending timelines, allowing additional comps to be submitted, and allowing the use of a second non-VA appraisal. Another aspect of the program that can create issues for veterans is the VA loan funding fee. The funding fee is a significant cost to veteran homebuyers. While the funding fee was designed to pay for the cost of the VA loan program, it is currently higher than necessary to achieve that goal after having been utilized to pay for other programs. Allowing the funding fee to return to its prior level would improve veterans' buying power. Veterans have earned this benefit, and we support responsible enhancements that ensure their ability to use this powerful tool to make homeownership a reality. We stand ready to assist in this effort to help our nation's veterans achieve the American dream that they have pledged to defend. Thank you, and I welcome questions that you may have.
Thank you, Mr. Cooper. With that, I'll recognize myself for 5 minutes to begin the question portion of the hearing. Mr. Sharp, I really appreciated your very detailed testimony regarding the appraisal process and specifically what a veteran must go through to secure a VA loan and purchase a property. You made a few proposals for how VA can make the process more flexible. In fact, you spoke about one of them, which is the suggestion for lender staff to be able to issue notice of value waivers up to 5% above or below an appraiser's estimate. Could you explain on, with the time that we have, which is not a lot of time, how this change would affect a veteran's ability to purchase a home at fair value and why you think it's important?
I just believe that the American Legion believes that since there is a shortage of appraisals, especially in certain communities because of the high cost of housing, that this would be one way of more or less assisting the veteran and also assisting the fact that they would be able to obtain more appraisers in a particular area, making the VA home loan program more competitive with other conventional loans.
Got it. Thank you very much. Ms. Devito, I appreciated your suggestion to improve the energy efficient mortgage or EEM offered by VA, and you recommended VA analyze EEM utilization compared with the cost of energy efficient home improvements and then increase the maximum loan amount a veteran can receive to make these improvements. And I certainly share the desire to see homes being made more efficient, and in particular if the VA program can assist in that regard. Could you discuss how the current loan limits for the EEM program inhibit veterans from making their home more energy efficient?
Chairman, thank you for the question, and we're very excited to share information about the energy efficient mortgages. As we mentioned, the lack of understanding that is one of the things that makes a VA guaranteed loan such a great benefit that needs to be understood before a veteran should choose to forego using a VA loan in this current market. To whatever extent we can share that information, we're very happy to do so. Currently, the ability to increase your loan amount is limited to $6,000 or up to $6,000. In current market prices for energy efficient upgrades such as solar panels could be, depending on the state, looking at tens of thousands of dollars. So for upgrades for a home that will be really impactful, that will save service members and veterans money themselves over time. I also mentioned the fact that veterans can face issues with even having cash and savings. So to the extent that energy efficient mortgages or energy efficient measures also help them on their monthly savings, whatever can be done to allow them to actually make upgrades that will create significant savings for them and their families, it's important that the dollar amount matches an ability to actually complete that.
Makes sense to me. I would be remiss if I did not mention my bill, H.R. 4657, the Veteran Home Energy Savings Act, which would allow VA to take into account during the mortgage underwriting process any energy efficiencies that have already been made to a home that a veteran wants to purchase with their VA loan guarantee. And I appreciate VFW and others supporting that legislation. Ms. Smith, I wanted to turn to you. We heard a pretty stunning statistic during the testimony from a 2021 survey of NAR that 89% of sellers were likely to accept an offer from a buyer with a conventional loan, but only 30% likely to accept an offer from a buyer using a VA loan. Then we heard 59% of sellers' realtors stated stricter home inspection requirements reduce the attractiveness of buyers using the VA home loan, and 36% of those surveys were concerned about homes not appraising. 38% were concerned about VA home loans taking longer to close. So those are some pretty daunting numbers. How is the National Association of Realtors educating its members on the VA home loan benefits and correcting some of these misconceptions in the market related to the program?
The National Association of Realtors is always working to help our heroes in any way that we can. I can tell you when it comes to appraisal waivers, that has more to do in the competitive market that we are in, because so many of the homes are going for above list, and that creates a problem and makes them less competitive. Certainly, there are timelines. Every state is different. I am from Texas. We have option periods, and if you are unable to get what you need in the way of an appraisal or an inspection within that option period, then it could derail the offer where the seller will go to the next person. I do know, too, that there are also sellers out there that will do anything they can to sell their home to a veteran. So there are a lot of proud realtors out there that would love to see our veterans have, excuse me, a roof over their head. So we work consistently with our members, as well as certification/designation that we have, that is our military relocation professional designation. We have about 13,000 of our members who have that, and it's been in existence since 2013. Hopefully we'll get more of our members to take that and learn more about how we can help our veterans achieve the American dream of home ownership.
Well, I think that would be great, and I have to give a shout-out to my local NAR representative, Lydell Fleming, who I just met with last week in San Diego, who is all about the VA home loan program, and obviously we have a huge number of veterans in our community that it's a great fit for them. So I am out of time, and I will recognize the ranking member for his questions.
Thank you, Mr. Chairman. Ms. Smith, you mentioned option periods, and very often people put earnest money down. Do you run into situations, and I'm not very familiar, I'm learning the programs, but where the veterans struggle to have the earnest money, or is that waived in these programs when they're going to do an option, in other words, to put earnest money down to close on a deal, provided appraisal or whatever hits? How does that normally work for the veteran as opposed to a normal buyer?
Well, and the reason why we have an option period in Texas, and of course other states call it, you know, their due diligence period or whatever it may be, but if you're not able to meet the requirements of the contract within the stated time frame, then they can potentially, the seller can move on to another buyer. And the timeline of what it's taking for appraisals and inspections for the VA loans has been a detriment to that and kept them more on the sidelines and not being able to compete in this hot market.
I got you. You also mentioned something about you would like to see the 50,000. There was something you mentioned about $50,000 for improvements on a property. Now, I understand building costs right now, labor, my goodness, if you can find anybody to work, the prices that we're seeing in the private sector, what would you recommend? What would you see a percentage increase of that 50 grand? What would we need? And I guess that would vary across the country depending on labor demands and material supplies, right?
It would, but I think that most of us are seeing supply and demand issues everywhere. It may be more so in certain areas than others. I'm in the process of building something and dealing with it myself on a daily basis. So if I could make a recommendation on my own personal experience, I would probably consider an increase of 20% looking at the percentage of how much things have gone up. And it looks like it's going to be like that for up to a decade, so it's nothing that's going to change very soon.
I certainly see inflation being a problem in the near future. The amount of money we're spending here simply, it kills the American dollar in the private market. And so I think that's an issue we're going to have to see. The VA is going to have to adjust going forward, is how do we manage these programs to compete with an inflationary market? Because by the time we move here in D.C., the veterans are left kind of holding the bag. They don't have the money for the down payments, certainly the improvement cost. And so those are challenges we need to address. But I appreciate you answering that question. Ms. Devito, I got a quick question for you. One of the more prominent recommendations from your written statements suggested the need for a better education for both veterans and realtors about the programs. What is the best way to reach these groups to help them better understand the VA loan process? Because we have that in our markets. I've seen it where even, I might have been eligible for the VA loan myself at some point, but I may have not have used it because I was like, well, I understand there's a lot of hurdles. So what would you recommend? How do we get across those hurdles, and how do we do that?
Thank you, Ranking Member, for that question. I think it's very important that whatever education and outreach is done is comprehensive, like you mentioned, between veterans, realtors, and lenders, and any interested party who's going to be part of the life cycle of the veteran's decision-making process. So to start, it's important that that education is happening in the beginning of even eligibility. So from Department of Defense through the Transition Assistance Program or any sort of financial education that's happening for service members. And then throughout the transition process, anything that's touching a veteran, that's providing education, there are certainly no shortage of wonderful resources that do provide that education. USO Pathfinder as an example, or entities that are in the community that are able to educate and touch veterans to make sure that they understand the full utility of their benefit. For realtors and lenders, I think there's opportunities that could be parallel to other benefits within VA as far as their participation in industry conferences, webinars, as Mr. Bell mentioned, and finding opportunities where those industry individuals and organizations are willing to let VA in and make sure that they're as educated as possible and providing the most accurate information.
Thank you, and Mr. Chairman, with that, I'll yield back.
I thank the ranking member, and with that, I'd like to recognize my good friend from Maryland, Mr. Trone, who I believe is on the Zoom. Mr. Trone, are you there?
Yes, we are. Are we coming through, sir?
You got it.
Thank you, Mr. Chairman. I appreciate the panelists joining us today to talk about increasing the opportunity for our vets to have that opportunity to buy a home. Purchasing a home, incredibly joyful step in a person's life. And I've got 43,000 veterans in my district, and ensuring they don't face any roadblocks in this process is so important. So we've been talking about education, and quite frankly, my questions about this, Chairman Levin hit on those same questions. Ranking Member Moore hit on the same questions. So all three of us have the exact same question, which gives me two thoughts. One is staff needs to coordinate the questions better. Sorry to say that. And the second thought is anything you can do to more elaborate, Ms. Devito, about if 13,000 folks have that designation you spoke of, where they're trained about the uniqueness and the advantages of veterans loans, that's out of a set of how many realtors? 100,000, a million? And how do we drive that number larger? Because that designation of knowing about the process is going to help our people, help our men and women. And that's what all three of us are focused in on. Ms. Devito?